March 7th, 2024. Whenever, I thought it was important. So this was the all-time high that we broke through today. And generally, whenever you test through a magnet that's that important, you end up, pausing and then going back through it. And usually you test it again. So when you trigger a sell signal or a buy signal on the daily chart, you usually test the magnet once and then try to test it again. You can see we triggered the all-time high, which is, essentially a breakout buy. If you think about it, you're buying the breakout above the bar. For the bulls, and we triggered it. We went up through it and then pulled back and then tested it again. It was another small pullback bull trend day today for the majority of the day. You can see we got really close to the moving average. We got a lot of tails below the moving average. We got an unusual amount of tails below the moving average, I think, for a small pullback bull trend day. So it made sense that we started to get a sell off towards the end of the day and became more neutral. But in general, as there's no closes below the moving average, no reason to sell, just look to buy. Bull bar on one, but a big tail on the top, so not really all that good. Follow through on two, buy the close in theory on two, but really not that good. A tail on the top and a tail on big tails on, the tops and bottom of one. So it's not all that strong. A bear bar closing near its low on three, but you're near yesterday's high, and, it makes more sense to wait for follow through. If you're selling below three, you're hoping for basically a massive collapse and to start a big bear trend. And if you're going to get it, you'll have plenty of entries, so you don't really need to sell below three. Bears who do take the sell below three, we're looking to scalp with 5 points. And if you can see here, it got to 5.25, but not 5 points, but not 5.5 points. And the reason it needs to get to 5.5, if you sell below three, you have to put your stop one tick below there to enter. And then your limit order needs to go, the market needs to go one tick past your limit order in order for it to fill about 90% of the time. About 10% of the time, you'll get lucky and it'll fill if it just touches it, but it usually needs to go through it by at least one tick. And so 5 points down from here is right here, but it needed to go one tick past that. So traders would sell here. This is their 5-point limit order, but a lot of it doesn't get filled and it gets bought back up. And as disappointing as it is that I got bought back up, traders realize that they need to get out. So they sell below three. They're disappointed four. What are they doing here on five? They're getting out. So you sell here, you're disappointed in this. They're using the tail on five to get out. And that's what's causing the bounce on six. Additionally, the traders who sold three were hoping the traders who bought below two were going to stay trapped. And if you bought below two, you were scared. Three is a scary bar, but those traders, trusted the math and scaled in. And once you see four, traders who bought below this low and scaled in are a lot more confident they're going to make money. Bears know those traders are confident, so they're exiting, and bulls are buying, and that's what's causing five. Six, a bull bar, but a tail on the top. You can see it essentially touches the close of two and starts to find sellers. Really not all that good. You're at the top of a trading range. I think it's a lot better to wait, see what we get. Seven, an inside bar, some sort of double top with two, but it's really not that good. Again, we're in breakout mode. We have a double bottom, 1, 4, and a double top, 2, 6. So better to just wait. Follow through, so bad follow through on 9 for the Bears, but no one really wants to sell below 8. It's an outside bar. It's really just a trading range bar, trading range price action. Surprise bar up on 9 for the Bulls. Essentially, any Bears trying to front run 7 and 8 probably giving up. A good enough bar that will probably get a second leg up, but I'm not sure how much higher we're going to go. 10, a bull bar, but a big tail on the top, and then an inside bar on 11. A reasonable buy above 11 for a swing. It's an inside bar, so it could be a final flag, but I think still okay to take. Follow through on 12 for the Bulls. It's okay to be long up here. You are well above the moving average, so I'm not sure how much further up we're going to go, but definitely okay to be long. Pullback 13, you can see Bulls were more interested in buying below 12 than above 12, and one of the reasons are they know they're buying high if they're buying above 12. So they want to buy the pullback and then look to scalp out somewhere higher. 14, a bull bar closing near its high. It's still okay to be long, still okay to buy. It could be a third push up, 1, 2, 3. And you know that realistically, we're not going to just continue to race up. Additionally, you have this channel line here from 6, 10, and then 14, and 15 breaks above it. So really only 25% chance we start to get another strong breakout here, which is why traders start to take profits. You can see bulls who bought above 14, they were able to make 5 points. And that's pretty much exactly where a lot of them scalped. So a lot of bulls bought above 14, scalped out with 5 points during 16, and that's what causes the big, the selling on 17. Traders know that it's dangerous to be buying up here. So what they're doing is they're buying and they have relatively tight stops, and they're just essentially waiting for the market to start to turn down, and they all quickly get out. So that's why you get bigger bars like 17 sometimes, is because traders are waiting for the market to start to go against them. And they're hoping to get a big climactic bar like they do on 15 to take profits. And then when they get it, they all start to sell out. And the moment the selling starts on 17, you can see it just got a lot bigger as the bar went on, um, closing near its low. So you get 17, you get a climactic breakout on 15, and then you get 17. So I would expect at least 2 legs of sideways to down trading, and I would expect the market to probably touch the moving average. Realistically, I think we're going to go sideways for the next hour or two after 17. Bad follow through on 18, and then just kind of overall disappointing bar on 19, starting the second leg down potentially. Traded above 19 on 20, but bad high one after this sell off. Second leg down 21, but buyers below. You can see, we tested, the bottom of the most recent buy climax was 15. You can see we immediately tested on 17, as often happens. So when you get a climax like this, you got to be thinking we're going to test the most recent climax. 22, it's a high 2 for the bulls, but a doji bar, not that good. Follow through for the bulls on 23, but the problem with 23, if you bought below, it's similar to the daily chart concept I talked about the other day, where traders bought below here, they were disappointed in this and they got out. This is a good example of that on the 5-minute chart. Traders who bought below bar 16, right? If you got in below bar 16, you saw 17, that's really disappointing. So what those traders did is they scaled in and then they got out during 24. So do you really want to buy above 23, knowing you're buying right where other traders are going to sell? You're buying kind of in the middle of a trading range, and additionally, 18 to 22 is somewhat of a tight trading range. So you're buying the top of a tight trading range, and we still haven't touched the moving average, which I think we're going to. And again, after 17, you can expect a couple hours of sideways trading. So it's really just not ideal to buy above 23. If you're buying above 23, you're hoping for good follow through, and you're probably not going to get it. And so traders who buy above 23, they see 24, and they knew they probably weren't going to get good follow through. And so when they don't get it, they just hit flatten. They sell the market. And that's what causes 25. They don't, a lot of them don't wait to try and get out around break even. They just exit the trade with a 1-tick loss or whatever. And that's what causes the big downturn on 25. 26, a bull bar closing near its high. It's 3 pushes, 19, 22, 26. I think it's a reasonable buy above 26. The problem is it's a big bar. The risk is big. And we're probably going to go sideways for a while first before we go up. So it's definitely a lot more of a swing buy above 26. Disappointing follow through 27. And when the bar is too big, what do traders do sometimes? Instead of buying above the bar, they look to buy a 50% pullback. So you can see here, traders, 26, big bar, big risk. They're not really that interested in buying. Doji follow through on 27, but consecutive bull closes. So they look to buy the 50% pullback during 28. 29, a breakout pullback closing near its high. Not bad for the bulls. It's a smaller bar, so the risk is in theory smaller buying above 29. But your signal bar was 28, and you can see 29 was the entry bar. I think it's an okay buy, but I would probably have a stop below 26 still at this point. Follow through for the bulls on 30, and then disappointment on 31 and 32. It's an inside bar, so it's a final flag. I thought there was a lot of interesting things going on right here. One, I thought it was setting up looking more like we were going to get a bear reversal, but we hadn't had any closes below the moving average yet today, which made me think that we might not. And we got this II 31, 32, a potential final flag for the bulls, and a failed breakout above the final flag on 33. So I thought, well, maybe we're going to go down. And then we got 34, breakout of the 18-bar range. But when you get a breakout of the 18-bar range, oftentimes you end up getting failed breakout of the 18-bar range, which is what happened 35, 36. And when you get a failed breakout of the 18-bar range, a lot of times the market will try to go and test the other side of the 18-bar range. So, I don't know. We'll just start with this day. Let's see, breakout of the 18-bar range. Failed breakout of the 18-bar range, went for a trade up. Failed breakout of the 18-bar range by a tick, went for a trade down. Failed breakout above the 18-bar range, went down. Failed breakout below the 18-bar range, went up. So I thought, looking at this, failed breakout of the 18-bar range, maybe we'll go down. But the big problem was that we hadn't had a close below the moving average. There's also a failed breakout above the final flag. So I thought the bears had a lot of good things setting up for them with the context for some sort of reversal. And we were overbought on the daily chart. We're at an all-time high, so it wouldn't have been surprising if we got it. But my problem was there was a lot of trading range price action, so it limited the odds of a big swing. And we hadn't had a close below the EMA yet, which was really my big issue with selling here. So I thought if you sell 36, I didn't think 36 was a bad sell. I thought you could take it, but I would sell small. And what you're looking for is essentially another big bear bar closing near its low at some point. you're selling 36, one thing's for sure, there's going to be buyers at the moving average on 37. So you know that you're probably going to get something disappointing like you do on 37. But what you're hoping is that we're going to start to trend down and start getting big bear bars, and then you can sell more when you get the big bear bars, and it just never ends up happening. So I think if you sell here, you probably get out somewhere in here. It's disappointing follow through 37, but relatively expected buyers at the moving average. Bounce up 38, but probably sellers above 37. 39, second leg down, really disappointing for the Bears. I think if you were short in here, you wanted to see 39 close at least below its midpoint and hopefully below the breakout point 37, but you end up getting disappointment. Sellers above 39 during 40, a low one short, but not really all that good. 41, outside up, so just trading range price action, and a bull bar closing near its high. 42. Bulls still have not allowed a close below the moving average, so still okay to be long, holding for a swing. Disappointment 43, but I think that you're not selling 43. If you were short, it was somewhere over here and I would get out, and 43 is not convincing me to sell. I need a big bear bar closing near its low 44, and you don't get it. You get outside up 44. Disappointment 45, but I think at this point the Bears have had their chance and we're probably going to end up getting the breakup to the upside and some sort of second leg up. We didn't get any sort of clear measured move today. I suppose, if you do that, this is a wedge, right? So it's, 1, 2, 3, and you take the wedge and you got a second leg based on the height of the wedge. But in general, today, I thought, it was realistic. It was reasonable to think we were going to go a lot higher because it was a small pullback well trend day. So it was very possible. 42, bull bar closing near its high. Like I said, reasonable buy. 40. All right, I already went through that. 44, 45. Okay, 46. An inside bar closing kind of near its high. Better to wait. And an inside bar 47. It's an II and it's a final flag, but it's kind of similar to 31, 32. I think we haven't had a close below the moving average yet, so it's more likely we're going to get a successful breakout to the upside of this final flag than it is that we're not going to, which you get a really strong bull bar closing near its high. 48. 49, which is interesting, retests the apex of the triangle. So 46, 47 is the triangle on a lower time frame because final flags, IIs, or not all final flags, but IIs in general are triangles on lower time frames. You can see the shape. And triangles are magnets. The apex of triangles are magnets. So you can see on 49, we retested the apex of the triangle and found buyers, a reversal up. Not, disappointing follow through on 50, but probably going to be buyers below, which was 51, follow through 52, 53, 54. Probably bulls exit below 54. We're getting pretty overdone here. Bulls are hoping for a big pop to take profits, but we didn't end up getting it. So most traders probably just get out below 54. Look to buy again above 55, but disappointing, never ends up triggering. Bears sell to close. And a lot of bulls up here just selling out, betting it's a good price to sell out as well. 56 closing near its low, inside bar again, 57. So another II. So we've had 3 IIs and they've all failed so far for the Bears. But we're pretty overbought at this point. I wouldn't be looking to buy above 57. Doesn't close very strong. I think we need a couple legs sideways to down. Doji bar 58. Bear bar closing near its low, 59, but we're right at the moving average, probably buyers. See, we got buyers 60, 61. Bull bar 62. Still haven't had a close below the moving average, and then we get it on 63. But I don't think buying, 64, 65. First off, I thought 62 made a better buy below than a buy above, and you can see the traders that bought below it. What's the low here? So they got filled right here. Most of them just ended up scalping out for about 2 points. So I didn't think it was all that great of a buy above 62, especially with a tight stop, because this channel was relatively tight, and we're probably going to get a second leg down. Wasn't expecting this, but I was expecting a second leg down. And then I don't really want to buy 65 because you're buying the top of the tight trading range there. So really not as good as it could be. That's why you get disappointing follow through on 66. A big bear clip bar 67, but a big tail on the top, obviously. Inside bar 68. None of this all that ideal. And let's see. So probably buyers below, probably sellers above. Bull bar 69. And basically, the last reasonable trade I thought was probably 73. Okay, swing buy betting. We're at least probably going here. And you can hope that we're going to maybe the 57 low, or if you're really lucky, all the way up here, but probably not. Reasonable stop entries today, 11, 12, 14, 26, probably 29. Buy the close through here, and you probably get up below 54. And that was pretty much it. Maybe 73, but I wouldn't really do much else. But yeah, that was pretty much it for today. Again, you got to keep in mind the bull days. Sorry, not the bull days. The small pullback trend days. Just look for the moving average, and if we continue to have closes above it. I wanted to look at the weekly chart because tomorrow is Friday. So the open of the week is going to be important tomorrow. It's only 20 points below. and the bears really would like to get another bear close on the weekly chart. So I would pay a lot of attention to the open of the week tomorrow, because I think it's one of those times we could definitely see a sharp move on the at the end of the week. All right, that's today.